Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Balchem Corporation Annual Report. Balchem Corporation offers a diverse range of businesses and services across various markets worldwide. At the core of their operations are three primary segments: human nutrition and health, animal nutrition and health, and specialty products. The human nutrition and health segment caters to the food and beverage industry with an array of products including spray-dried powders, extrusion and agglomeration, blended lipid systems, and more. This segment also offers specialty vitamin K2O, microencapsulation solutions, human-grade choline nutrients, and mineral amino acid chelated products. The animal nutrition and health segment provides microencapsulated products to enhance health and milk production in ruminant animals, as well as nutrient supplements for various species of production and companion animals. It also offers chelation technology for enhanced nutrient absorption and methylsulfonylmethane for animal health. In addition to these segments, Balchem Corporation's Specialty Products division distributes ethylene oxide and ammonia primarily for use in the healthcare industry. This segment also markets propylene oxide as a fumigant to control insects and microbiological spoilage, and chelated minerals for high-value crops. The Balchem Corp stock price has remained relatively stable over the past year, experiencing only minor fluctuations in response to various news events. Despite reporting strong financial results, including record net sales and a 10% increase in its annual dividend, the company's shares declined by 3.11% in pre-market trading. This lack of significant change can be attributed to profit-taking after the stock approached its 52-week high. Other news events, such as analyst coverage initiation and director stock sales, also failed to trigger a substantial stock price movement exceeding 4.1%. The company's overall performance has been characterized by average daily movements, with recent weekly average volatility around 2.84%. This stability suggests that investors have become accustomed to Balchem Corp's consistent financial performance, leading to a lack of significant reaction to individual news events. Balchem Corporation maintains a market capitalization of $6 billion, broadly in line with the industry peer group. Balchem Corporation trades at a higher price-to-earnings ratio of 37 times and a higher price-to-book ratio of 4.54 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The balance sheet appears very conservative, with liabilities representing only 27% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be categorized into several key areas. In the human nutrition and health segment, differentiation through scientific data, intellectual property, and brand value has contributed to revenue growth. Additionally, investments in long-term value differentiation have also driven growth. In the animal nutrition and health segment, overall industry economics and the ability to leverage university and field research on animal health and production benefits have been key drivers of revenue growth. Furthermore, higher sales in ruminant and monogastric species markets, average selling prices, and production efficiencies have all contributed to growth. The specialty products segment has also seen significant revenue growth, driven by demand for performance gases and chemicals, particularly in the healthcare industry. The adoption of micronutrient agricultural nutrition products by high-value crop producers has also been a key driver of growth. However, there are also areas where revenue decline is evident. In the other segments category, a decrease in payments for services provided to St. Gabriel C.C. Company, LLC has contributed to revenue decline. Additionally, currency fluctuations and exchange rate volatility, regulatory requirements, anti-dumping investigations, interest rate changes, raw material shortages or price increases, and changes in tax laws have all had an impact on revenue. Overall, the primary drivers of revenue growth or decline are a complex interplay of factors, including industry economics, scientific differentiation, market demand, regulatory requirements, and currency fluctuations. Net income experienced a significant fluctuation between 2024 and 2025. Initially, it increased by 20.5% from $128,475,000 in 2024 to $154,845,000 in 2025. However, the trend reversed in 2026, with net income decreasing by 17% compared to 2025. The change in profit margins also warrants attention. Gross margin saw a modest increase of 10.2%, rising from 35.3% in 2024 to 35.7% in 2025. Operating margin followed suit, increasing from 19.2% to 20.2%. The effective tax rate decreased from 22.8% to 22.2%, contributing to the rise in net income and profit margins. The primary drivers behind these changes were the increase in net sales across various segments, including human nutrition and health, animal nutrition and health, and specialty products. This growth was partially offset by higher manufacturing input costs, which affected gross margin. The company's financial performance indicates a positive trend in its operating cash flow. In 2025, the company generated $216,556,000 in operating cash flow, marking an increase of 19% from the previous year. This upward trajectory is consistent with the company's overall financial health, as evidenced by the positive net cash provided by operating activities for the past 3 years. $183,761 in 2023, $181,999 in 2024, and $216,556 in 2025. The steady growth in operating cash flow suggests that the company is effectively managing its finances and generating sufficient funds to support its operations. The company's debt level has undergone significant changes over the past year. Initially, it decreased with no specific amount mentioned on page 27. However, by page 29, it increased to $386,000 available under the 2022 credit agreement as of December 31, 2025, which is an improvement from the previous year. On page 36, total liabilities increased by $3,381, indicating a slight rise in debt levels. Nevertheless, on page 53, there was a decrease of $26,000 from 2024 to 2025. Regarding interest expenses, they have fluctuated significantly over the past year. Initially, they increased due to fluctuating interest rates and reference rates, such as SOFR on page 10. However, by page 27, they decreased by $6,309,000, 38.2%, from 2024 to 2025. On page 30, there was a significant change due to the use of derivatives for hedging purposes. Furthermore, on page 37, interest expense, net decreased from $16,528,000 in 2024 to $10,219,000 in 2025. Overall, while there are some inconsistencies and unclear information, it appears that both debt levels and interest expenses have undergone significant changes over the past year. Management's vision for the company revolves around driving production efficiencies to maintain a competitive edge in the global market. This is expected to be achieved through various initiatives, including the growth of the micronutrient agricultural nutrition business, which has shown promise due to its unique two-step approach to solving mineral deficiencies in plants. The company also prioritizes product development, allocating resources to those products with the greatest commercial potential. Furthermore, management aims to create a culture of learning and development among employees, fostering an environment of continuous learning and growth. In terms of financials, management expects operations to generate sufficient cash flow to fund working capital requirements and necessary investments. The company is also actively pursuing additional acquisition candidates to further drive growth. Long-term value differentiation will be achieved through strategic investments in scientific data, intellectual property, and brand value. Sales growth for human nutrition applications relies on differentiating the company's products from lower-cost competitors. Overall, management's strategy focuses on driving efficiency, innovation, and growth while maintaining a competitive edge in the market. The company has made significant investments through acquisitions to expand its business. According to page 10, one of the key objectives is to acquire other businesses, indicating a strategic move to grow and diversify operations. Additionally, on page 30, it is noted that goodwill and intangible assets are recognized in the financial statements, suggesting that these acquired businesses have contributed positively to the company's overall value. However, there is no evidence of divestitures mentioned throughout the document. This implies that the company has not sold off any significant business units or assets, focusing instead on growth through acquisitions. The company's financial activities have been focused on share repurchases. According to various sections of the report, it is clear that the company has indeed bought back shares from employees and through open market purchases. The authorized stock repurchase program allows for the purchase of up to 4 million shares. In 2025, a significant number of shares were purchased under this program, with a total of $107,636 spent on share buybacks. This is in addition to previous year's purchases, which include $5,682 in 2024. The company's commitment to buying back shares suggests that it is confident in its financial position and is taking steps to return value to shareholders. That concludes the financial summary for Balchem Corporation. Feel free to comment below, and I will be happy to answer them when possible.